Professional trader? This is a question we get asked quite frequently. Of course, there are many differences, but the main difference is this. New traders think about how much money they can make. These are two opposite attitudes. At first, you may wonder how a trader can make any money when they're focusing on a potential loss. But the professional trader, one of the most consistent realities in trading is that if you trade long enough, at some point in time you will likely have losing trades. But how you manage those losses has a trading. When we enter into a trade, we need to be okay with taking on a loss. We don't have to like it, but it's best to accept losses as a real component. We argue that the potential to be consistently profitable increases with the use of protective stops, which helps get you out of a trade when the market moves against you. That's why we feel the first step before entering into a trade is to determine when you're going to get out of the market. For your decision-making process. Traders who do not identify their risk before entering into the trade can quite often go through the 3 stages of getting the dreaded margin call to a winning trade. But when hope doesn't work, you try wishing. You wish the market will come back enough to get out at the price where you got in so you don't have to take a loss. It continues to move against you, and eventually the margin watcher feature gets you out with a big loss. So what went wrong? It's hard to make good decisions in the heat of the battle. We need to make decisions based on sound analysis rather than the need to just get out of a trade. How many times have you finally gotten it? It's happened to all of us, but those who decide not to let this happen to them anymore take a big step to becoming a better trader. So, determine your entry, identify your risk, and project. Now, think about tossing a coin for a moment. When we toss a coin and choose heads or tails, we have a 50% chance of being correct. But what? Basically, we're putting ourselves in a position to be break even. So to become profitable, one of 2 things needs to happen. When we're right, then we lose when we're wrong. Most traders prefer to win more when they're right, coin toss when we're right, and lose $1 when we're wrong. The answer is, of course, that we would more likely be consistently profitable. Since I have the numbers on my side,